Hello and welcome everyone. I am Rachel Deschelle, Senior Manager of Trading Services here at Charles Schwab and your host for Trading Price Patterns, where we do exactly that. We find price patterns in the market and we trade them. In this class, we make the assumption that you are already familiar with the basics of technical analysis. Now, if you're not, you're more than welcome to stay. But if you are newer to technical analysis and looking for more of those basic concepts, we do have a Getting Started with Technical Analysis webcast as well. Now, I'm joined today in the chat by Mike Fairborn. Please chat in your questions, comments, requests throughout the session today. I'll be sure to keep an eye on those. And please follow us on X. I am Rachel-CS. He is Mike Fairborn CS. Please give this video a like as well, and please subscribe to us on Trader Talk Schwab Coaching on YouTube. So today we're going to do something a little bit different. We're going to focus a lot on volume patterns and volume trends while looking through and deciding to trade some of these price patterns. That's something that we don't touch on quite a bit in this class, but I think it is an important reminder to discuss. So we're going to go through that today, so stick around. But before we get started, let's dive into some important disclosures here that options carry a high level of risk and are not suitable for all investors. The information that we're going to cover is for informational, educational purposes only, should not be considered any type of recommendation or advice. We are also going to go through the paper money application. It does have some differences between the live side and paper, so keep that in mind as well. And then as far as our agenda, we're going to start with a market overview. I have kind of a new chart for you guys today that'll get you thinking a little bit. We're going to review our existing trades, place new trades, talk through the trade management like we do with each of these classes each week. So let's just start out with that market overview. We've definitely seen a bit of this steep trend line break in the S&P 500 today. With us moving lower on elevated implied volatility. Now, this trend line has been very steep, so it's not too surprising that it has been broken, but I would say if it is looking to find a level of near-term support, it would probably be right around this 68.50 level or so, where we see that recent gap and the pullback to that recent gap, where we may find some horizontal support there if we do have a little bit of a further drawdown there. But remember, the trend is still intact, so we still have higher highs making a higher low. Even if we were to pull back to this horizontal support, that's still not making a lower low, so our uptrend in that case would still be intact there. Now, I did want to cover the S&P 500 equal weight index, and the reason why is because this other chart that I'm going to pull out for you guys as well just kind of speaks to the rotation that's taking place under the surface, because we know with the S&P 500 it has over a 30% weighting in information technology. So when information technology underperforms or is breaking down as a sector, that tends to drag the overall index with it, just purely based on weightings. Now, if we look at the S&P equal weight, obviously those sectors, companies all have equal weight in this. We're seeing that today we are making a new all-time high, showing us that there are areas of the market, there are pockets of the market that do still have that strength. And we're going to talk about a little bit of that as well. So just wanted to pull out that chart there too. The NASDAQ composite, which is over 50% technology, we can see it failed here at resistance of this ascending triangle here. This is a price pattern class, so I had to bring this one up. Had a little bit of a fail there, but again, the trend is still intact. We're making higher highs. We're still making a higher low there. If we were to pull back a little bit further, I would not be surprised if we find right around this 23,150 or so, just kind of at that level of formal support there. Now, this was the other chart that I was going to bring into the mix here. When we talk about rotation, we talk about strength in other pockets or areas of the market. And I just wanted to bring out this relative strength chart here. So what this essentially is, this is over a 5-year weekly time frame here. We can see this pattern of the Russell 1000 growth index versus the Russell 1000 Value Index. So taking those largest growth companies compared to the largest value companies, we can still apply those same metrics of technical analysis to anything in the market, any different asset class. That's what makes technical analysis beautiful in this case, where we can just pretty much use it on anything. So I wanted to bring this chart up because this really shows that we did have growth outperforming value for quite some time. It also kind of went back and forth in this rectangular pattern, and growth had still outperformed since the line was going up for quite some time, really up until late October, early November or so. And ever since then, with that line going down, this shows us that relative weakness in growth, so that index that is in the denominator compared to the benchmark index, which would be value. So in a sense, what this chart is telling us, that our growth versus value ratio actually just broke through this long-term level of what was old resistance, new support, now is new resistance, where value has been leading actually compared to growth over the last few months, which you're seeing breakouts in the materials sector, you're seeing breakouts in financials, in industrials, and even today in energy as well, with the improvements in relative strength too. So wanted to bring that up. If we even change that to a daily, you can kind of see same metric. We're on the daily, we're right at another familiar level of support there, but that could speak to a little bit more of the rotation that's taking place into more value-oriented areas of the market versus growth, which we have seen for quite some time now. So just wanted to pull out that chart, give you some other ideas or different ways of looking at what may be happening under the surface of the market, because the indexes obviously only tell us one little bit of the story. So let's go into reviewing some of those old trades from last week. So if we're looking at our price patterns ones here, I'm actually going to open up this on the chart side. So we placed an order on Chime. Remember, we're looking for a 2% break above this cup and handle pattern. We have not gotten a fill yet because price has retreated again to a level near support of its handle. So that one is still in there and working for us. Honeywell, we're doing well on that one. We had this inverse head and shoulders pattern here at the bottom. We entered with that 2% break. We saw that move. We're right up near kind of where our profit target is. Still a few points away there, but we do have our stop in. This would be an opportunity to move up our stop in this case. So I'm actually going to move it up right underneath where we have this other former level of support that we can see here. So I'm going to move that up. In this case, you can see right here, this is where I'm moving that stop to, is right in this other support zone, because that old resistance now becomes new support. So we're going to protect some of our profits by moving up our stop in that case. Let's see here. Now let's go to Live Nation. This one, we also spotted an inverse head and shoulders here. You can see the arrows pointing at those different parts of that reversal pattern here. We talked about taking that long position when we saw that move above 146.60, which we definitely indeed had. We put our stop right at these lows in price right before the breakout. So our stop is still there in place. We're seeing a little bit of a tight consolidation or some compressed price, compressed volatility today. So that trade is still intact there. And then WSC, this is one of the ones that is also kind of in the waiting game here. We did get triggered on that break above 2206 with that 2% break above that neckline of this inverse head and shoulders yet again. We placed our tight stop right underneath. And we are still kind of waiting in limbo, but I'm going to zoom in and here show you that it looks like it's a little bit of a bullish engulfing candle here right at this level of support here. I guess if we were going to be a true technician here, we wouldn't necessarily call this a bullish engulfing since it's not actually occurring at a low. But it is looking like it is an engulfing candlestick here, and it is occurring at that former level of support. So it's still kind of holding that breakout there. So wanted to make a couple comments there. Yeah, let's go back to HON. You made a really good point. We talked through this as well, that gap area may be that level of resistance for Honeywell, where we placed our profit target. That was our measured move as well, and that is where that gap really exists there, Chris. Now, the questions regarding the LEAPS accounts, that is in our long options class, but yes, I do still use the same paper money account for that for all the different classes that I teach. So good question there. We will address the long options questions in that class, or you can make your comments on that specific video and I'll answer those questions there. So let's look at some new price patterns today. I mentioned we are going to focus very heavily on volume when it comes to the development of some of these price patterns because it is really an important kind of crucial element to looking at confirmation and validity for a lot of these price patterns, because you'll see a lot of these price patterns form that look like an inverse head and shoulders, look like a head and shoulders, things like that, but they might not necessarily follow some of the rules that were really set in place on identifying the validity of some of these patterns, which would give you better odds for a breakout, a true breakout in that direction that the pattern would be suggesting. So we're going to look at a couple of these. The first one that I want to actually do before I forget, before we dive into the volume actually, is bring up this ISRG Intuitive Surgical from last week, I think it was, that we talked about this, where we kind of learned about what a shortfall is in the looking at the range, and we mentioned that a shortfall was when we had a range and price came down kind of to a lower point, but not necessarily all the way to that level of support before breaking out to the upside. We talked about how that signals false breakouts, early breakouts, things like that, where we may see a support retest or it may put us back into that box. And we mentioned how we were all going to watch that pattern, so I wanted to bring that one up. This is just kind of evidence of how that can be those shortfalls. You want to be on the lookout for those within range patterns, because as you can see here, price reversed all the way back to the lower bounds of that range and is kind of catching that up. So let's go into some of those features when it comes to looking at the rules for what makes a head and shoulders pattern here. So I'm going to start with the one that we've been looking at in this class for quite some time. This is the infamous pattern that should pretty much be printed in textbooks at this point because of the nature of how symmetrical this pattern looks. It has all the measures that we are looking for as technicians when identifying a head and shoulders pattern. So we're going to talk about some of those. So first and foremost, being some of the rules where we do see a pretty straight line as far as those pullbacks to support, really making a true defined line in the sand for our neckline support there. Our shoulders are nearly at the same exact level here. If I just kind of draw this here, that is what you will see with a true head and shoulders pattern. Typically, those shoulders are not going to be too far away from each other, not too further than a couple percentage points away. So maybe 1 to 3% points away. And you can see those are pretty much identical. I don't know if they're on the penny or not, but you can see pretty even there in that case. Now, couple other things here when we look at now the volume trends, okay? I want you guys to make note of these throughout a head and shoulders pattern. We will typically have an increase of volume in going into the left shoulder. Okay, so that's one thing we tend to look for. We'll also typically see a spike or increase in volume when the head is being crafted as well. And then we will also typically see an increase in volume as well when it comes to the crafting of the right shoulder. And then lastly, what we will see, if you got all of those 1, 2, 3 checks along with some of the rules with the overall price pattern, you will likely see an increase in volume with a break of support there as well. Now, right now we're having price, it's risen the last couple days or last few days, but it's been on declining volume in this case. Okay, so this is kind of what we want to pay attention to. Should we see a further move down in this? We always talk about how we want to wait for price confirmation, which is that we talk about a rule of being 2% of a break in this case. If you don't see that increase in volume, that may be that sign that, hey, that could be a false or early breakdown. So it may give you an indication that you may want to raise that percentage filter a little bit more, or just kind of wait and see if price comes back up to, if we do have a breakdown, comes back up and kisses this level of resistance there. I have a couple questions here. Are price patterns formed or best found on the daily chart? Okay, it looks like Mike Fairborn, you found that. I will say no, not necessarily, because all these price patterns are fractal. You're going to see these on all different types of time frames. I'll show you one example here, one that I was looking at. Now this, I'm going to give you a disclaimer. It is not a futures class, so I'm just going to be showing this price pattern here. But here's an inverse head and shoulders pattern on Bitcoin on the 90-day 4-hour class here, where we saw that neckline resistance right around $95,000. We see the left shoulder, the right shoulder, and the head, and can kind of project and make that measured move from there, since we have seen a confirmed breakout. But again, going to shift from that because this is not a futures class here. So Dell, again, we have been watching this for quite some time. We are still going to wait on the breakdown of that. I'm actually going to set an alert for us, because if we do see a breakdown, a 2% move below support on an increase in volume, I want to make sure that we buy a put option in this case and take a directional bearish stance with Dell. So right now I am just going to do a little calculation and set an alert. So I'm going to take 116.56 times 0.98. Okay, so that's 114.22. Okay, so I'm going to click on that, create an alert, and I'm going to say when it goes below 114.22. Now, in this class before, we have made conditional orders with options based on the stock price, but we just really don't know what the price of the option is going to be when the stock price does drop $4. This pattern has obviously taken months and months and months to form, so we don't know if and when it's going to get there. So I'm not even going to try to guess that or simulate that in this case. So I'm just going to set an alert there, and we'll keep an eye on that for the next class here. But today, focusing on the volume. Now, another thing here. So we have another head and shoulders here. And what can you see? Okay. If you guys can tell me what is kind of off about this pattern as far as some of the rules that we just went through. So I'm going to show this chart of Snowflake on the 1 year, 1 day. I want you guys to point out every single rule that you see which hasn't been met in the formation of this, what appears to be a head and shoulders type pattern. So I'll give you a minute there. Okay, I've seen some responses come in. Awesome. You guys, yay! Everyone is paying attention. This is awesome. Okay, So yes, the shoulders are offset. So if I take this shoulder, especially on a horizontal neckline, we can measure this pretty easily. You can just take a measure of one shoulder to the other, and we can see that's about a 5.5% difference between the shoulders there. So there's a little bit of imbalance there. And the other major one is that volume is inconsistent here. So we don't necessarily have a huge increase. I'm going to make the volume a little bit bigger so you can see it. We did have a little bit of an increase in the right shoulder here. We had this large increase here, which was kind of a part of the head, but we didn't see a super large increase here on the head here. Same with the left shoulder there as well. So we're not seeing two noticeable differences in the volume there. Something that may help you as well is maybe putting a volume average study on as well. And if you see a spike that's more than, let's just say like 20% more than that average daily volume, that may be one of the areas that you kind of tend to look at as far as a significant change in volume, which you should technically see with a true head and shoulders pattern here. Now, not to say this is not a topping formation, this could definitely be a topping formation here. So similar to what we have with head and shoulders patterns, this still could be a breakdown of obviously support. We see the trend has been broken. We see the higher or the lower highs, I should say, in the lower lows that are being met. So you could still treat this as a bearish setup or a bearish trend type of play in this case, but to call it a head and shoulders pattern when it doesn't meet some of those criteria for a pattern can make it a little bit difficult when just kind of forecasting kind of like a measured move from that. Okay. So snowflake, that was snowflake. Excuse me. Okay, now we're going to look at another one here. We have another one. There's so many different head and shoulders in this market. That kind of tells you what the type of market environment we're in, which is kind of funny because typically you see more of one than the other. If we're kind of topping out in the market, you may see a lot of true head and shoulders topping formations. If we're bottoming out in the market, you may see a lot of inverse head and shoulders formations. So maybe take a look at some of the sectors and industry groups of these stocks that we are noticing that are creating these head and shoulders patterns. We're seeing some head and shoulders patterns in areas like we saw with technology, with Dell and with Snow, or Snowflake, I should say. And we're seeing some inverse head and shoulders in areas like we talked about, where we just showed a chart of Bitcoin. We're seeing this consumer staples. I believe this one is consumer staples. Let me double check. Consumer staples, yes. Consumer staples name, we have this inverse head and shoulders reversal here. So just kind of pay attention to that, especially since we already talked about some of the rotation that's happening underneath the surface. Just kind of pay attention to where you're seeing a lot of these patterns develop. So with this pattern, we can definitely see these shoulders. We can see the neckline. It is at a slant. So our shoulders are going to be at a little bit of a slant, about 2 percentage points away. That's good enough for us. We also have these increases in volume on the left shoulder. We have a big one there. We have a decent increase in the volume with the head right there. We have a decent increase with the right shoulder. But the interesting thing is, we see this breakout here, but we don't have an increase in volume on this breakout. So this is interesting to me. Okay, we actually see that the volume today is actually, and this is still with about, 2.5 hours left until market close. We're seeing one of the lowest volume days, and even over the prior few days as well on this advance that we have seen through this entire period. So I would find that pretty notable. So if we're traders looking at this setup, while the price and the rest of the volume has quite a pretty setup here for a bullish trader that is looking to trade this pattern, we may caution ourselves a little bit with that decrease in volume there. Or like you guys are mentioning in the chat, you may kind of pull in another piece of technical evidence like the 200-day simple moving average or something like that that may help as well, just kind of define that long-term trend too. Today, since we're just kind of looking at price patterns, we just kind of focus on price. So what I may be looking at as a trader is to find these levels of old resistance here. And I'm going to still kind of note this one because we can see this used to be a shelf of old support here, and we can see a gap was formed. Now this gap really started, I'm going to zoom in here for you guys. Oops. Zoom in here for you guys a little bit so you can see this a little bit easier. So this gap really started from here to here. Okay, so that's the entire window of the gap. And so when you have gaps form like that, that entire window becomes an area of, or a zone of resistance. We're already seeing price make its way through that zone of resistance to try to close that gap, which is, I would say, notable. But again, we're seeing that increase on light volume in this case. So as a trader, I may wait for additional confirmation, maybe even a 1% break above this next level of resistance here, right around 158.67, and I may even wait to take a trade there. So I'm going to place this as one of our trades here to wait for additional confirmation. Our resistance is 158.67. And I'm just going to multiply that by 1.01 to get a 1% move. And that gives me a price level of, I'm going to put this in here, 160.25. Okay. So still $3 points away. We could, maybe it's not too late to see an increase of volume, maybe tomorrow or so if this advance continues, or even if it pulls back a little bit. But I know I want to wait for additional confirmation before taking this trade because the setup has been here. We have all the rules that have been met with this inverse head and shoulders pattern. I just want to wait for that additional rule of confirmation with the volume before taking that possible break, and we're giving ourselves a little bit more room there on the upside. Now, if this does continue, if this move does continue, we're going to look at the measured move, okay? So I'm going to measure this measured move from the very lows of the head to the neckline. That is about a $23 move, okay? And as you see, quite often in this class, sometimes that measured move really ends up with us reaching another familiar level of resistance right around 177 or so. Okay. So let's take a look here and craft a possible trade for this. Okay. So we're still going to place this trade, but we're going to wait for additional price confirmation because if we had this breakout, this big breakout on low volume, we may see a pullback to that level to retest that support here. So I'm going to go to buy custom with OCO bracket. And we're just going to place a stock trade in this sense. So we're going to focus on stock trades today, kind of just like we did last week, since the main focus of today is looking at volume. We are going to kind of talk about some of these targets here. So we know that we can spend $10,000 or risk $10,000 in one individual trade. So I'm going to take $10,000 divided by our entry with a buy stop, which is going to be 160.25 as an activation price. I'm going to take $10,000 divided by 160.25, and that gives me 62 shares. Okay, so I'm gonna go with 62 shares here. Okay. 62 shares. We're using a buy stop order. A reminder that stops are just activation prices. There's no guarantee to where we will be filled. So it's going to send a market order in that sense. We're going to make that good till canceled. We're going to place our limit to the upside at 177. We're just going to make it 177 even because sometimes traders like round numbers. So we'll just do the 177 there. On the downside, let us put in a stop to the downside here. And where would we like to put it? Well, I think we can put our stop to the downside right at that neckline resistance, now support. So right around 154 or so. So I'm going to put our stop to the downside around 154. Okay. So you can kind of see that's that horizontal line that we're looking at where price just broke out of. Okay. So we have our entry. We're waiting for additional price confirmation because if we see this lack on volume today, likely what tends to happen, you have a little bit of a pullback or a little bit of pause or consolidation before a possible move, or it's warning us to a possible false breakout, which in that sense, we do not want to take the trade. So we are getting in using a market order, activating when the price is 160.25, using our measured move to the upside from the breakout point, and we have our stop here at current support, that breakout point there. So I'm going to press confirm and send this to the price patterns group there. We're making sure all these are good till cancel. Okay. So yes, we have a lot of lines on this chart, a very messy chart now, but let's move to the next one. Another consumer staples stock that looks like it is trying to break out as well. We're going to pay attention to this too. Okay, so let's talk about ranges because we see ranges quite a bit in the market as well. They typically develop at bottoms of the market. They also typically develop in the middle of trends when you have a little bit of a pause or a little bit of consolidation before that continued advance or decline. And in this case, we've seen quite this range really from September initially. And so what you're typically going to see in a range, you're obviously going to have multiple touches on either sides. To make it a rectangle, you really only need 2 touches on the upside and 2 touches on the downside. So we got some of our rules there. We have this zone being touched more than 2 times, actually 4 or 5 times on both sides. And excuse me, another thing we also will see during a range, which is kind of normal to see, you'll typically see increases in volume right at those levels of support or resistance. So I'm just going to highlight all these, and you can see these increases in volume were with every touch of support or resistance here. So again, another touch of support, we ran back up to resistance, another increase there. We had a teeny bit of an increase on the low, but today with this little breakout, we did have a little bit of a breakout here. We are not necessarily seeing a huge increase in volume here. I'm going to make this bigger so you guys can see it. Make this way bigger so you guys can see it. So you can see what I'm looking at. Okay. So if we look at volume, I want you guys to notice this one little bar. Okay. See this little bar today. Price moved above resistance, but look how tiny this bar of volume is. There is no confirmation there on that move. So we had the increase in volume before, but we're seeing such a tiny bit of participation in that move with a break of resistance. That could be where our spidey senses kind of come up and say, okay, well, is this really a confirmed breakout? Yes, it had a certain percentage move from that initial breakout point, but for us as traders who are paying attention to volume trends and using volume as confirmation, this is not necessarily giving us that confirmatory participation on that break of the initial trend. So that's another one where, I mean, right now we are kind of trading below resistance here with this high wave candle. It's definitely showing that a lot of pressure is existing right now at this level of resistance with this really long wick and the really short difference between the open and the possible close for today. So a lot of indecision happening there, a lot of pressure from the upside. But again, we want to make sure we wait for that confirmation with volume or enough of an increase or a move to the upside here to give us a signal that the trend has possibly changed direction here to give us conviction. And yes, I see Stay Gold always says bull trap perhaps. It could definitely be a bull trap perhaps. We will have to see if we do break back down to that level. That could be the case. And some of you may be wondering what a bull trap is. Well, I can kind of explain that as well. So sometimes when so a lot of professional traders, retail traders, institutional traders, a lot of times we're not necessarily looking at all the same time frames, but we do have eyes that will show us some similar patterns that show up on a chart. So if I'm a professional trader and I'm looking for a level of support or resistance, I may kind of make the realization that there may be another group of traders that is also recognizing these levels of support and resistance. And so that could make I could make the assumption that a lot of traders may be looking to place a lot of buy stops right above this level or so. So right above this level. And so that's why a lot of times you see resistance almost being like this zone, because if traders who are paying attention to these patterns know that, hey, there may be a lot of buy stops above this level because there's technical traders wanting to trade this breakout, you may see price kind of lead itself there, the stops get triggered, and then price kind of pulls back because there is not enough participation within that move to really sustain that move to the upside. Kelly saying they punk your entry. Could be possibly a one way of saying it there, but just keep in mind you're not the only one that's looking at some of these levels, and a lot of technical traders may kind of place orders at those similar levels. So that's where we want to wait for other measures of confirmation, like a certain percentage move out, and not get too eager, too greedy here with this move. Because here, this was probably, that was only about a 1.5 point move outside of that range. So that's why a lot of the times we stick with that 2% rule in this class. Some technicians may stick with the 3% rule and be willing to give up a little bit more to still be on the right side of that trade in that case. Let's see. Okay, so Beth, you had a great question as far as can't strong volume simply mean capitulation? If so, how do we discern between capitulation and confirmation? So capitulation is one of the phases of a trend where you're going to see, here's a great example. Okay. Capitulation is when price has fallen quite a distance within quite an amount of time and just kind of almost has this like fall off the edge type of break of support. And this is kind of what you saw here when price broke through this level of support and gapped down, and we had that very, very large increase in volume. Okay. So that is what capitulation looks like in this sense, where you have a sustained downtrend. It's almost like the distribution starting, but then the capitulation is next, where you have that rapid sell-off with that trend. Typically, it's with a really large candle move down. This is like another example here. It's typically a large bodied candle or a gap down in price coupled by that really, really large spike in volume here. So you kind of saw that here as well on that one. So hopefully that helps a little bit. Okay, so with BJ, this is another one where we kind of want to wait for confirmation on this one. I'm going to set an alert with a 2% break above. Actually, in this case, I'm going to use a 3% break just to be extra safe above resistance here. So I'm going to look for a 3% break, and that's going to put us right here. Okay. So that's going to put us right at 98.50 or so. Now, if I take this measured move, from the lows to the highs of this pattern here, and I move that up with a break, that still gives us a little bit of room to run. So even though we are giving up a certain percentage of that move, we're waiting for that confirmation to take place. And that also allows us, if we do have a move up and a retest back of support, that gives us a very defined entry to place our stop at that initial breakout should we see that percentage move breakout here. So this is kind of what the risk to reward would look like. So if we waited for that confirmation of a price advance, a volume advance, we would theoretically take that entry there, have our stop at that initial breakout, and use our measured move to the upside here in this case for that particular range. So we're not taking any other trades today, hopefully kind of going through some of these examples and talking through a little bit more of the volume trends helps a little bit with your process in identifying where you may see a false breakout of a pattern, or just kind of reiterating that we do need to wait for confirmation, whether it's a few closes above that level, the 2% rule that we use in this class, or maybe if we want to be even more safe, be willing to give up a little bit more to wait for a confirmed move, maybe that 3% move there. Now we do have 2 more minutes. I'm going to just run through really quickly a couple patterns on the watch list here. We have Texas Instruments here. Okay. We see the increase in volume. We saw the increase in volume on the break. So Texas Instruments is going to be one of those that has an inverse head and shoulders pattern there within information technology. We had the breakout on Applied Digital here with that triangle pattern. We're having maybe a little bit of a swing back there. We did have that increase in volume on that breakout. So that was that confirmed breakout there. It did have a percentage move above that. Let's take a look at some others. Looking like a flag or pennant pattern that's taking shape in Interactive Brokers here with that strong advance, a little bit of a decline here. Keep in mind that is roughly a $9 flagpole there, taking shape right at resistance there. What other one could I show you real quick? Bristol Myers would be another one. It looks like it's actually breaking out of its flag pattern as we speak. So this was another one. It has roughly a 5% advance. Looks like it's breaking out of that possible bull flag there in that sense. Okay, we are at time, you guys. Hopefully this helped today. Thank you so much for your time. Please give this video a thumbs up. Please follow Mike Fairborn and myself on X. He is Mike Fairborn CS. I am Rachel-CS. And please subscribe to us on Trader Talk Schwab Coaching. Thank you again, traders. See you next time.